serve as a strong validation, though some stocks have yet to rebound despite institution buying in already. So this lack of upwards movement might be due to concern about the inflation in Malaysia after adjusting the RON 95 gasoline subsidies, right, following diesel subsidies, which has raised concern. So according to our analysis at Dimensional Investment Research Department, Malaysia stocks could benefit from increased investment from Wall Street over the next 2 weeks, especially as major US tech companies report second quarter earnings. Since the beginning of the year, Malaysia's stock sentiments have been heavily influenced by who? By US tech stocks, right? And reflecting ongoing growth in foreign investment in Malaysia markets. So in the first half of the year, daily average trading volume increased by 59%, which is up to 3.27 billion in ringgit. All right, here, let me just highlight it for you all. And this is according to the data of Malaysia Investment Development Authority, which is highlighting that significant achievement in attracting foreign investment, particularly in manufacturing and service sector. All right, now, all of you have a clear understanding? If yes, please give me a response. Okay, good. All right, now, according to Dimensional Investment Research Department analysis, the average daily trading value of Bursa Malaysia have already went up, have already surged by 59% from 20.6 billion in the same period in 2023 up to right now is 32.7 billion. What does this mean? Means that it's showing strong market trading activities, increase in volume. So the benchmark of FTSE Bursa Malaysia KLCI index crossed the 1,600 point in early May, right? Which is marking its highest level in 2 years. Wow, right? So fluctuating dynamics between 1,580 and to the range of 1,620 points. Okay, on the stocks front, Bursa Malaysia achieved a historical milestone, right? Which is surpassing 2 trillion in ringgit in market capitalization on May 7, 2024. So we at Dimensional expect a historical high in daily trading volumes of all derivatives with increased foreign investment. So while important indicator of market depth and momentum, such as like interest contracts, sets over 360,000 contracts in March. So in additionally, trading volumes of FBM, LCI futures also continue to show positive trends, right? Which is surpassing the record volume of the contract volume of over 95,000 in contracts per day in April 2024, which is already exceeding the contracts of 2023, which is exceeding the record of 2023, right? So the surge in the trading volume underscores the growing confidence and the opportunities that Malaysia capital markets. Now, all of you, do you all have the confidence in Malaysia market? Please give me a response. All right, very good. I see a lot of you are really having confidence. Very good. Good response. Okay, now, at the same time, the recent IPOs also have seen significant returns, right? IPOs from Malaysia have already is in a very good condition. Now, especially in the construction sectors, the technology sectors, and also consumer sectors. And this week alone, 3 companies have consecutively listed on the ACE markets, which is achieving an impressive gains on their listing day, which is with the increase of how much? From 129% up to 204% from their opening prices. All right, wonderful, right? So currently, companies like Wellchip, Kuching Co, and EPB are available for subscription. All right, as you can see here, these 3 right now are available for subscription. And we will also always share IPO stocks rating with all our Scholar investors based on the company performance and, of course, based on their growth expect also. So as for now, Bursa Malaysia has already seen 24 new companies listed year to date. So constituting 4 main market by the end of July, and 19 on ACE market, and 1 leading entrepreneur accelerator platform markets. So with a total market value of 7.6 billion, this indicates that Wall Street increased investment in Malaysia stocks as well. And I believe that this is an opportunity for Dimensional and also all Scholars investors also. All right, next important thing is the stocks market is about to start a new bull run. So with short-term decline in individual stocks soon to be followed by new opportunities for growth. Okay, and these are the latest trends from foreign institutions. And with this data in mind, okay, now with this data in mind, how do you think that the FTSE Malaysia Index will move tomorrow? What do you guys think? Give me an answer in the comment area, all right? Okay, write down your answer. Okay, some believe it will rise, while some of you also expect it to remain volatile. All right, last night, I emphasized that my optimism for a strong rebound, right? Driven by a reliable corporate earning, economic growth expectation, planted investment, and also government reforms to aim at a long-term economy and official improvement. So the short-term support level for KLCI right now is at, the support level is at 1,588 points, which I have also mentioned it yesterday. All right, and with the resistance is at 1,623 points. All right, keep that in mind. All right, here. Then the resistance. The first one is support. Okay, it's for your reference. Now, let's talk about our second topic together, which is peak season plus price increase plus rate cuts expectation. So now, all this can the energy sectors strengthen. All right, now look at this. Now, let's talk about this month. This month is July, right? And it's a very important month. Why is it? July is a highly anticipate months for evaluating performance, especially during busy trading periods. So the market focused sharply on peak season trends that shows a clear performance certainty, right? So among these, commodities benefits from resonance of peak season, plus price increase, plus the expectations of interest rate cuts. So now, likely to becoming the direction of the subsequent market. In July, also, there will be a very important time to release earnings forecasts, which is typically guiding the market to focus more on fundamentals and trading realities. Now, as productions and construction demand are gradually enter the peak season in the third quarter, market sentiment during the peak trading season will also gradually improve. So the construction of data center in Malaysia, real estate, infrastructure projects, and concentrated release of the midstream and also the downstream stocking and production demands will directly drive the chemical, metallic, and steel metal resources. All this, and most importantly, among the global supply chains reshaping process. Overall, supply patterns are tight, right? And this has been a considerable interest in trend of gold stocks. Why gold stocks? Right now we can see that international gold price is fluctuating at high levels. And with the expectation of further rate cuts, the energy and metal sectors are expected to attract future capital inflows, right? So the price of the periodic resource such as metals and oils have shown significant increase. So copper, oil, and other also global price commodities maintain a pattern of fluctuation and strength in the second quarter, which is primarily catalyzed by tight supply and ongoing expectation of federal rate cuts. So recent U.S. inflation, weakening employment trends, and weaker housing sales data, all these have indicates a cooling trend in U.S. economy inflation. At last 2 weeks, the U.S. June service sector's PMI exceed expectation. Unemployment rates rose in June, and the wage growth rates declined, which is further driving down the U.S. dollar and also the U.S. bond yields. So continue to lose market trending. They are continue to lose market trending. Okay. Now let's look at the next thing. So regarding the energy and the metal sectors, it's recommended to focus on upstream periodic commodities such as chemicals, aluminiums, gold, oil, and steel. Okay, what is upstream periodic commodities? What does this mean? It typically refers to raw materials or commodities that are extracted or produced at the beginning of a supply chain. All right. So now, firstly, it's because first thing is the peak season and the price increase. So peak season and price increase, which means that upstream periodic commodities face limited production capacity and potentially intensify supply-demand imbalances. And the third quarter is also the most effective peak season period, right? And also, second thing, here, this is the first thing, and then this is the second thing. Second thing, which is the performance. Some commodities have already seen price to increase in the first half of the year, which is indicating strong earnings certainly. So July to this month, July is also one of the months when the performance is closely watch, which is making earnings the key trading indicators. Now, the third thing is interest rate cut expectation. We always talk about this, the interest rate cuts expectation. So expectation of interest rate cuts by Federal Reserve keep on rising, right? Which could further catalyze the relaxed trading condition or to stimulate a demand for commodities. All right, last but not least, the cost effectiveness, which is current periodic commodities offers a high cost effectiveness in terms of allocation. All right. Now, all scholar investor, do you understand this part? If yes, please give me a response. Okay, very good. Now, right now, let's explore the standout stocks in Malaysia for the metals and energy sectors. Okay, now let's look at metals and energy sectors and which firms are doing well in Malaysia. So foreign interest in Malaysia oil and gas industry and highlights potential opportunities in upstream service and also midstream expansion and tank terminal infrastructure investment. So firstly, these stocks, there is 7108, the code number, which is Perdana. So Perdana Petroleum Berhad is a Malaysia-based company which is providing offshore support service to the domestic and the regional upstream oil and gas industry. So as you can see also, it surged 9.6% here. It surged 9.64% last Friday, which is reaching a new high for the year. All right, so now the next one, which is 7277. This is the second one, Dialog. So Dialog Group Berhad, which provide technical service to upstream and also midstream and downstream sectors of oil, gas, and petrochemical industry. So Dialog Group is committed to multiple stages of oil and gas value chains and also collaborates with various technical partners to enhance their solution. So its client includes multinational oil giants and also national oil companies and multinational energy and service provider. So while the company has office in several regions worldwide, most of its revenue comes from Southeast Asia. All right, so from technical analysis perspective here, it's currently under the pressure from the moving average 30 trend line. But the formation of the support at the moving average 5 and the moving average 10 and the moving average 60, all these trend lines indicates a potential triangle patterns in the stock price. So making it a focus for next week. Right, as you can see here, a triangle, right? Here, 1, 2, 3. So mixed together, as you can see, a triangle. So this is moving average 5, moving average 10, and moving average 60. So everyone, this is an focus for our next week, all right? For this week. Now, the third stocks to look at, which is 5243, Valisto. So Valisto Energy Berhad, which provides service to oil and gas industry. It specializes in It specializes in drilling service for exploration and also development and also production wells, and along with the maintenance service for upstream sectors of the oil and gas industry. Okay, now, however, there has been significant outflows of the short-term funds for this company, and right now, a buying opportunities has not yet emerged. So, for these stocks, have to wait first. All right. Okay, everyone have a clear understanding? If yes, please give me a response by a yes in a comment. Okay, now let's move on. Okay, next. Right now, we are on our third topic, which is AI statistic analysis, current portfolio composition, and the strategy based on the trend of our health stocks. Okay, now, Dimensional. All right, wait. Okay, now, Dimensional has now gathered registration forms from over 70% of our scholars. So based on the data collected, we have also utilized the AI 4.0 system to conduct an extensive data analysis and to identify several common issues among all our scholars. So what is the common issues? For example, let me give you all an example, all right? Some of you are holding on to stocks from years ago, and the stocks without inflows of funds or even significant trading volumes, which means that the stocks cannot even move quickly. So, while others, we also saw that are managing stocks that they are just within uptrend, but haven't broken through yet. And also, we also found that there are also stocks trending poorly with a significant institution outflows. All right, now it's okay. We will address this common issue in a series of 4 classes and also provide a tailored strategy for these stocks. So our approach follows the principle of diagnose before treating. So which is ensuring precise strategy for each situation. So specifically, is to reduce risking solution will be formally introduced this Sunday. And last night's section, we also covered 3 common reducing risk methods, right? Which is the first thing, which is adjusting position by swapping weaker trending stocks for a stronger one. And secondly, engaging in swing trading with current holdings. How? By buying low and selling high, right? And the third strategy is to patiently awaiting price increase. So now, following last night's section, some scholars asked me about selling high and buying low. Okay, so today we will be focusing on applying wave theory alongside our earlier trend following discussion for practical trading. All right. So when applying the risking methods during specific trading times, it's crucial to forget the cost price, right? And assess based on the current market trends and the stocks trend. So during the de-risking process, it's essential to avoid falling into these pitfalls. First one is holding on to stocks passively without considering market trends. So if a stocks, so let me explain more. If a stocks isn't aligned with an upward trend market, especially like for example, when KLCI index is rising, and then there are lack of new investment, right? It's advisable to switch to a stronger alternative rather than just holding on to the underperforming stocks. So you will start there. And now, second thing is to averaging down without a clear strategy. Okay, many retail investors tend to average down on the stocks after they face losses, right? So, which is often leading to increase even more losses. Why? Okay, let me tell you, average down is a good thing, but it needs to be used wisely. So average down should be driven by market trends. If the potential for the stocks to rebound, then only average. And then strategic opportunities to average downs can also be explored when there is potential for the stocks to rebound. However, it's crucial to exit position promptly if a stock rebound but fails to sustain further gains beyond the initial recovery levels. What does I mean by that? Okay, let me give you an example so you have a clear understanding. Okay, let me get all your attention here. If a stock was initially purchased at 2 ringgit, okay, initially purchased as 2 ringgit, additional shares bought at 1.5 ringgit, and then the stock's price rebound to 1.7 ringgit. But at 1.7 ringgit, it shows resistance. So the additional shares bought for at 1.5 ringgit should be sold promptly to secure your profits from 1.5 ringgit to 1.7 ringgit. Right. So it's important not to hold on to revised average cost, because your average cost will be at 1.75 ringgit, right? But don't, because of this, and you hold on expecting to further gains beyond 1.7 ringgit, because 1.7 ringgit shows resistance. But after taking profit, consider waiting to dips to the support levels, and then before considering additional average down strategy. So employ multiple swing trade techniques to achieve a profitable outcomes, such as those applied to the stops of 5028. Remember, I explained before. All right. Now you all have a better, clear understanding, right? Okay, now let's dive into practical techniques for breaking evens and making profits. Now, using daily price fluctuation for low buy and high sell in a day trading, which means that these techniques rely on daily price fluctuation of the stocks and using a small price difference to break even. Okay, again, let me give you an example. Here is the example, okay? You can have a look at here as well if you follow along, okay? So for example, if you have 100 shares that you are currently in loss, and today the stocks opens lower or its price drop, right? So you can buy another 100 shares as soon as the price stabilize and start to rebound. Then when the stock's price rises, then you can sell the original 100 shares to make a profit. So in the other hand, if the stocks open higher or peaks after a surge, you can first sell 100 shares first and then buy them back after the price falls, thus reducing the loss from the drop. Understand? So by doing this, you can achieve double or even multiple profits when the price rise, and possible reduce losses or even make profit when the price drop. Of course, this would help lower your overall cost until you break even. All right. And again, These methods require a good understanding of the stock's various aspects and familiar with the price trends for effective low buy and high sales operation. So note that this is our day trading methods, and this is more suitable to those who have time to monitor the stocks market. So if you cannot track stocks in the real time and you have just a little time to watch the market, so these methods might not suitable for you. All right, because this one you need a lot of time and a lot of patience as well. So for instance, during the pre-market trading section of KLCI index, if you see that KLCI index open highest, or if that is a good news about stocks, you should then sell when the stocks open higher and rise further, and then buy back after it fall, which is using the price difference to lower costs. All right, now, all scrolling investor understand this method or not? If yes, please give me a response in the comment area. Okay, every one of you are very smart. I see a lot of you put yes and understand. Now, another example. For example, okay, I give you another example. This is the stocks of 0203 as metric. If we know its behavior well, we can use it as a daily changes of day trading. So on July 1st, right, we could sell at 0.215 and then buy back at 0.205, which is making money for the price difference and turning a loss into a profit, right? Now,
Aduh.
Cari ya.
Oh my god. Yes, ke apa pun?
Mana itu?
Ibu ada kat grup.
Meski cari nota. Dia cari ambil teks. Mana? Dia ambil SG.
Ya. So, boh. Adik, ibu ada burger kan?
Belum.
Adik nak burger special daging. Tahu? Daging ke ayam mat sedap.
Jangan kan nak kena beli sos apa siapa?
Apa?
Kau kena beli sos apa?
Sos apa?
Nak pura-pura ni. Kau cakap
Tadi?
kicap manis, kicap ceri.
Ha. Apa beza? Kicap pekat apa?
ABC lah. Buat
Cilantro.
Macam panas.
ibu ada nak burger special lah. Daging.
Aku sebenarnya tak lapar pun, cuma tak selera.
Oh. Ni apa
Ada
tu?
dah buat tu.
Ni cilantro.
Ha.
Mana aku dapat? Dari mana? Resepi tu.
Cilantro apa? Daun sup.
Nak bertumbah.
Daun sup.
Tak mana dapat.
To invest because it's 1 ringgit per share.
Coffee hooks.
Now, the stock's
20 minutes.
price dropped to
Lagi berapa ni
80
kawan?
cents.
Kena
80
ikut
cents
apa?
per share, which is
Tutup nanti
reducing
pukul 9
the
ni,
investment value to just 80,000, right? And a loss of 20,000. As simple as that. And now, after you lost your 20,000, what is your goal? Your goal is to regain that 20,000 without waiting for the stock price to down to 1 ringgit. Is it? The goal is to gain 20,000 without waiting for the stock price to rebound to 1 ringgit. Right. Here's how. How you can do it. Let me tell you. When the stock price bounce back at 89 cents, okay, which is 89 cents. At that time, sell your shares. So when you sell your shares, you'll get back 89,000. And when it drops to a support level again, buy again. So by repeating these cycles of selling high and buying low, you can lower your cost and break even even after when you are just waiting for it to reach and not reach. And also this strategy is without using additional investment. So take control of the investment with the capital reset method and turn your losses into gains. Better.
Wah, sakit awak. Ibu tu berat.
Right. Give me a response.
Apa itu? Cilantro. Ay, pasal. Kita duduk sini je, kita tahu ada orang datang.
Nak.
Oh, Syah. Jangan cakap ya.
Tak nak. Cepat. Bila kau ada burger.
Very good. Now you understand the capital reset.
Wah, dia dah bagi special daging.
Now
Tahu.
let's move on to the next thing. So let me give you an example again. So let's delve into the real world example. Consider this 0104 G-Tech is bought at RM 2.39. Okay?
No.
It's bought at RM 2.39. Okay. This is during the market correction. And that is held by the rest of the market. But importantly, it means it's
Cepat.
lows.
Cepat. Cepat dia
So
buat apa?
this indicate the uptrend
Shampoo lah.
Yelah, cepat buat apa?
right. So all delighted. The stocks
Membuat ilustrasi.
Apa beza dengan shampoo?
135.
Mana tahu siapa beli untuk apa? Ada benda. Ha?
So
Aku bagi tahu je tahu tak apa.
Untuk pakai kat bawah.
because after
Yelah pakai untuk bawah tau. Dia punya penggunaan untuk barang buat apa?
Boleh pakai kat bawah.
Ya, dia tahu dah pakai kat bawah tapi dia membuat itu apa?
It's a shampoo.
Yelah dia buat rambut apa? Eh, kucing. Oi, oi, oi. Baca. Dia buat rambut apa? Tak berminyak.
and the result
Flawless.
matters.
Silky smooth.
So you might ask,
Huh?
should I sell now?
Straighten the hair.
Ya.
Should I buy now?
Shampoo rambut.
Yelah.
It cleans your hair.
Tu je.
Have all these are
Ni simpan
logical
shampoo ya.
others.
Macam baru beli pun. Anak kuat.
Baca lah.
Dia buat apa?
Hydrate.
Hydrate. Dia buat you dapat hydrate. Hydrated.
This type of issue because they have substantial capital and
Sekuat.
enter market in stages.
Kau pandai.
They doesn't enter market just by one shot. They enter market in stages. So such as like some institution takes about 6 months to build up their position. So while we dear investor, we must follow funds,
Dia pergi.
build position in just buy.
Siapa bau minyak? Minyak telur. Ada sesuai. Ada.
So
Minyak.
this is why AI
Berpeluh.
plus
Masih tambah.
future now harness the power of artificial
Membuat ia
intelligence
lagi
and
telur.
machine learning to analyze the market data and execute trades automatically.
Yelah, what's the point of the shampoo?
The coconut nut is a big nut.
Before I kick your dad. Give me the
Like AI will not run,
50.
AI will
Fat.
not be frustrated as well.
Fat.
So
Bigger.
this is why giant organizations like BlackRock, Resonance Technologies, Two Sigma, Citadel heavily rely on AI and big data
Twice the price to beli the
for
burger.
their trading. They leverage AI to enhance their trading efficiency. For instance, Resonance Technology is renowned for its Mendelian funds,
Aku tahu.
which utilize complex mathematical models and AI for
Oi, silap orang. Lekuai.
embrace AI trading and transform your trading strategy, just like these industry leaders. Okay, now we talk about this one. This is an important thing. Okay, so listen up. Now, how can we reduce the chances of getting stuck with a closing stocks? Okay, let me explain one by one. The first one, alright, which is adopt the right investment mindset, which means that invest in stocks based on solid fundamentals. Look at the growth potential in the companies as well. Of course, they must have stable profits and a good operation is promising industry. And have to trade. Don't just enter the market with I want to enter right now, just enter it. Wait for the right time to enter, such as at the support level. Right. So time your trades carefully, especially when buying the market stabilize after a significant drops to capitalize on the potential rebound. Okay. Now the third thing is avoid buying at historical highs, which means that buying at the previous high. Don't buy stocks trading at a historical high price. This is to reduce the risk of buying at inflated value. Already buy at a very expensive price. How could it go up even more? Right now, this is very important. Don't trust rumors. So-called insider information should be approached skeptically. If you think about it, why would genuine insider information be leaked out to the public? Right. So, and then this one is connect with this one, which is stay rational. You see, buying stocks isn't just about the act of purchasing. You need a comprehensive understanding of the stocks that you are buying, that you want to enter, which is including the company performance and also positioning, as well as the overall market direction, which is in the uptrend, in the good trend, and also your own risk of tolerance. So avoid following the crowd and making decisions based on just your feeling. Oh, I see this bucket is going up. These stocks will be going up as well. Just following based on your feelings. Must choose a little bit of research. Alright? And then now, know when to switch stocks. So again, if a stock goes against you, it ends, it trends, or even it trends weakening from an
trend is weakening. Now, you need to know when to switch to a different stocks. If this stocks is not active and it doesn't do well in performance, switch to another stocks. And also, last but not least, to avoid problematic stocks. For example, problematic stocks include those with significant fundamental issue, which like, for example, poor performance, exposed insider trading, regulators violation, all these we don't want, right? And these are problematic technical patterns as well. All these we don't want to enter this type of company, right? So there are many ways to break even. And during the 4-day course, in our upcoming course, I will explain various methods based on the actual stocks holding of our scholars who have submitted their registration forms combined with AI big data analysis. So currently, our AI system has analyzed the stocks holding of our scholar who submitted their registration form. It uses K-means clustering and sum change point detection to analyze our scholar investment preference stocks and their stocks type. So the data will further analyzed by our analysis as well. We will be using AI system insight along with their research and the current market trends to create the most suitable profit plans for our scholars. Right, and these plans will be announced on Sunday night, Sunday evening. So scholars who haven't submitted their registration forms yet should do as soon as possible. Should do right after our class end. Alright? So those who understand this point, please reply with a okay or yes. Alright, next, let's go over the stocks that we are currently holding on in our portfolio. First, let's start with the stocks that we focused on last Friday. Last Friday, we focused on these stocks, right? 5161 JCY, which is our golden stocks. Again, JCY International Berhad is an investment holding companies that design and develop hard disk drive components. So their products include base plates, heat sinks, solid state drive exposure, surfactors plates, hard disk covers, and also steel connectors. Right, and they are operate mainly in Malaysia, Thailand, and other regions as well. So the main reason that we are optimistic about these stocks is because of the second quarter of 2024, which is this one. The earnings per share grew by 120%, and its revenue has become consistently growing year on year here. Alright? So the revenue from the fourth quarter of 2023 to the first and the second quarter of 2024 shows a rapid increase compared to 2023. So from a technical perspective also, the stock is currently in the second wave of a primary uptrend. Follow, if you agree that it's in the second wave, please reply with a straw. And if you don't understand, please reply with a no. Alright, from November 2023 to April 2024, right, during this 6-month period, institution funds will continuously absorbing shares through a fluctuation at the bottom, which is buying JCY shares at a low price and eliminate unsteady retail investor. So many impatient retail investor who don't understand the fundamental and also the capital flows will eventually sell their shares at a low price. They just want to get out of the market. of fluctuation institution have accumulated enough of the low price shares. So at this time, they've used funds to push up the stock's price. So during this process, you can see that the stocks rose from 0.27 to 0.93. And from the end of April to mid-June, the stock's price went up more than double and retracing the position of moving average 30 line without breaking it and rebound again. So last Friday, the AI Fund Monitor System detected a wild movement and notified scholars to buy it, right? So we believe the scholars that transaction price were around 0.79, and our first target for the stocks is above 0.91. Alright, and of course we'll make the latest decision based on the capital situation at that time. Alright, now let's take a look at another stocks, which is Tesco 5140. As you can see, after the strong get up opening last Monday, followed by an adjustment 3 consecutive days on Tuesday, Wednesday, and Thursday, and peeling back to the gap, right? So, however, the adjustment were marked by a small orders, and the moving average and the moving average 30. All these have still started to turn upwards. So we believe that within the stocks market improve this week, Tesco will continue to have an upwards momentum. So as I mentioned earlier, now this stocks is in an uptrend, meaning that the primary trend, long-term trend, is an upwards trend, which is indicating in the green arrow. Alright, so previously there was a constructing downtrend, and which is also considered a secondary trend. Alright, which is symbolized by the blue one. Alright, whether we can make a large purchase, now it depends on whether this secondary trend has finished its adjustment or not. So one important method to determine if the second trend has finished adjustment is to refer to the historical trends and see if it has reached the support level of the primary trends uptrends or not. Right. Previously, we mentioned that Tesco is currently in the third wave, right? First wave, second wave, and right now it's in the third wave, right? And what I mentioned before, the third wave is usually the most explosive wave, where the market sentiment is most optimistic and investor confidence is high and the buying power is strong. So compared to the first and second wave, the third wave is usually the longest in terms of duration and price increase, and the third wave often exceeds other wave, as I mentioned before as well. So right now, the moving average 10, moving average 30, and moving average 60, all the trends are trending upwards, and the previous adjustment did not break below the moving average 60, which is the lifeline of an important support level. So a rebound without breaking this line aligns with the buying point in the trend following strategy, where a stable pullback will occur.
Syah,
So,
kalau kita tak pergi,
observing
pergi mana
the
sekarang
recent
Syah?
patterns,
Pergi mana?
Tesco has the
Kesing lagi tadi main handphone.
Ya. Adik dari tadi tak mandi sebab nak tunggu Ami lah.
Pergilah mandi dulu ayah dia ni.
As long as this
Sebelum Ayah balik ni, adik tunggu.
Ya ke?
Ya, kita kena mandi dulu.
Oh, okey.
Mana Adik nak marah?
Ya, sorry.
Okay, do you understand? If yes, please give me a
Nanti
response.
Ami,
By
ibu
saying
apa
yes.
dia, adik tak tahulah. Adik akan hantar barang. Tahu?
Okay, now let's take a look at another stock, which is our 7022 G-Tronic, right? And in December 2023, the stock's price fell from a high point due to a major sell-off, which was the main reason for the decline. Alright, so from April to early June 2024, over a period for more than 2 months, a triple bottom formed. So when a triple bottom forms, right, the first bottom of the triple bottom was formed on April 23 and rebound to 1.32, and then the stock's price fell again, reaching the second bottom on May 9, 2024, which is similar low pattern, and then rebound again, and then the third bottom forms again, and on May 39, which rebound on June 6th. So it broke through the neckline and began to rise, right? So a triple bottom is an important reversal pattern, which is indicating a change from a downtrend to an uptrend, right? So recently, the stocks has been fluctuating, but it not broken the strong support of the moving average 30. And additionally, looking at the proportion of the shares, 70% of the shares are profitable, indicating that the recent adjustment are about to end, and there is an expectation of short-term breakout opportunities. Alright, so among the stocks we hold, some are near the cost price, and some has small profit, right, and others are still adjusting from the previous index adjustment and haven't not rebound yet. For those stocks haven't made a profit yet, I will continue to track and provide a specific strategy based on our market condition. Alright, so don't worry. Oh wow, okay, right now it's past 9 p.m. already. So again, today our class, I have shared a lot of content with everyone, and I hope that you all found it enriching. So if there is anything that you are unclear, please approach our assistant after our class, and also to receive our lecturer notes. Or you could even ask any question that related to our course with our assistant. Alright, so that's wrap up today's class for now. And I hope that everyone will gain something valuable